So let's go back first to setting up stock charts. I want to mention a couple things and clarify a couple things and take it a few other steps. I will try to answer questions after the first part of this. So, once again, we're just trying to do this for 30, 40 minutes at max. I've set myself an alarm that, will go off and remind me that I've been talking too much. So let's get started. Your basic stock charts, this will what you'll see whether you're a subscriber or not. I've logged into a subscription, but it will still start with a default page. So last time we looked at Apple, we can look at Apple. We can obviously, we can look at other charts. So here's your basic chart that you will see when you go into stock charts. If you just open up the free platform. And of course, as I mentioned last time, we need to remove some things and change some things. So if you go down to this second part, I sent you a sheet a couple weeks ago, and I have it. And if you need it again, I'll be glad to email it to you. That's sort of my basic setup. So let's go, first of all, change a moving average. We want to change this simple moving average to an exponential, a 20-period moving average. And then we want to take the longer-term moving average, and update that. Then we just go down to one moving average. Then we want to take off the RSI and the MACD, even though they're both can be good indicators. That's not the ones we're looking at today. So you click none for the indicators, and you update, and you'll get this clean chart, candle chart, 20-period exponential moving average. All right, let's now look at some of the indicators we want to add. All right, so the first indicator is the relative performance. That measures the price, the ratio of a stock or ETF to the S&P 500. Now, what I neglected to clarify last time was, in order to run a comparison, you have to put in $ symbol, SYMBOL, colon, and then SPX. You can see that's what is in here. So if you want to look at something, in other words, if you want to look at, you could look at a railroad stock and compare it to the Dow Jones Transports. There's all sorts of different ways you can do this. This is the basic relative performance. As I mentioned last time, you want to find in a strong market, you want to find stocks or ETFs that are outperforming the S&P. As I think I talked about last time, Apple's probably outperformed the S&P by about 4 or 5%, at least since the start of the year. And the reason this is important is when the market's going higher, these stocks will generally outperform the S&P 500. And when the market does correct, they will not be hit with as heavy selling as some of the other stocks. And in a down market, so for example, in a bear market or a very corrective market, if you're looking for stocks to short, then you want to look for stocks that are acting weaker than the S&P, because the opposite is true there. So in a weak market, those stocks that have negative RS, or relative performance, will act weaker and will drop faster than the S&P. So we have the relative performance here. We hit update. Now you'll see this is the relative performance of the S&P versus the SPX. You can kind of see in this very small little box, it shows you what you're looking at. The second indicator we want to add is the on-balance volume. It's an indicator in fact, I read the first book on it while I was still in biochemistry from Joe Granville, and it turned out Joe uses an on-balance volume totally different than I do, but nevertheless, I think he developed a very good indicator. All right, so there we have both the RS and the on-balance volume. So if you're a member of even their cheapest, I think it's $14.99 or something subscribership, once again, I get no financial incentive to have you sign up, though I'm hoping that if enough of you do sign up, we'll get them to add start bands, but we'll get into that in a second. So then let's add an overlay. So if you're paid, you'll see all these categories over here, these parameters. So if you don't get them, you'll see like this, below, and then you hit advanced options. So let's add a colored moving average to the RS. So we want to have a moving average. They don't have weighted moving average, so we'll use an exponential moving average. There are basically three types of moving averages. Simple is just 10-day moving average, divides the last 10 values by 10, and you get the moving average. Weighted, it weights the current data more heavily than the earlier data, as does exponentially, but it does it in an exponential fashion. So, okay, so we've added an exponential 21-period moving average to the relative performance, and here's what that looks. Okay, so the relative performance is now in red, and the moving average is in blue. You can see, it's important for what I do. You want to notice whether the RS is making higher highs and how it's reacting to the moving average. So we'll do the same thing for the on-balance volume. So we'll go down here. Let's pick a different color, maybe purple. How's that? And once again, we'll add an exponential moving average. And 21 period. And then you hit update. And now you see the on-balance volume in purple, I guess, and the moving average in black. So you can see the on-balance volume, started to bottom out here in January, and it's still quite positive. In fact, looks like the on-balance volume made a new high just this last week, so it's confirming the price action. All right, let's look at some other things we can add to this. So you can also add an approximation of the Stark bands called Keltner Channels. Keltner Channels were devised by a commodity trader back in the 70s to find out breakout prices. So you'll find very few people on the web really know how to use Stark bands, which maybe that's a good thing, but my students and people I've taught about them are really find they're a very useful tool. So if you put Keltner Channels in, the main difference is that Stock Charts only uses an exponential moving average, and Manning Stoller, who developed this, uses a simple moving average. So you're going to get some different values. So the default values are 20, 2, and 10. So the 20 will change to 6. The 2 is fine, and we'll change the 10 to 15. That's what this does is it takes a 6-period moving average, and it takes 2 times the average true range over 15 days and adds it or subtracts it. So let's update here. And you can see these red bands, around that. We can go down here. Now that we're a signed up member, we can say, well, let's use a red color for the moving average, and let's make it a big red, so solid, thick. All right, and then for the Keltner Channels, let's do something in lime green. How's that? We can stand out a little bit, and you can add it. You can take it into dashed, dashed thin, dashed. Let's see what dashed thick looks like, and hit that. And now you see the Keltner Channels Stark band like on the bar chart. So you can see here that both in early February and as was the case in March, we moved well above that Keltner channel for one day, closed that at a sharp new high on that announcement, moved even higher the next day, but then pulled back pretty sufficiently. So I think we're up about $200 a share, came down close to 85. And so these tell you, when you should, it's a high risk buy area that it was, and 2 days later you got a much better entry. Conversely, in March, we got close to the lower Stark band here, and that was a good time to look back on the long side. The other thing I would think about adding to here are pivot points. So you go up here and you can add in pivot points, and once again you hit update, and there you have the pivot points. So here's the pivot: support 1, support 2, resistance 1, resistance 2. So these can be very, those of you who've, follow my work, they can be a very good way to help gauge good entry and exit points. You can see right here in early February, we hit the R1 resistance level, moved sideways until the start of March, and we dropped back below the pivot here in March, and then we moved sharply higher. And so they can give you another gauge. And you can see here in the chart, we can magnify this up a little bit. You can see the pivots, gives you the values here in the bar chart, gives you also the channel, the Keltner channel numbers. So, you know, currently the upper channel is at 207.73. So we closed at 203.86. The 20-period EMA, which is a good level of support, that you can get all that information there. And that you know, pretty much sets up most of what I use in stock charts. So let's look at the sheet I sent you. See if we can change a new share here, and you can see here's the attachment I sent you last weekend. It details all the information you need to set this chart up. The colors are a little bit different in here, but that basically gives you the overall plan of it. And you know, they give you a 3-month trial. So if you want to sign up, you know, they do require, I think, a credit card. And then, you know, after a month, they'll start billing you. You know, when the RS is declining, that means that the Apple stock is falling more than the S&P 500. So it gives you a relative view of how the stock price is there. So if it's dividing the Apple price by the S&P, and as Apple price, you know, continues to fall, you know, it has negative relative performance. Then when Apple starts to act better, which is what old-fashioned tape readers used to do, you start to see stocks that are doing better than the S&P. That's when the relative performance moves above its moving average and starts a new uptrend. So it doesn't, you know, I hope that it's not really a fixed percentage. It gives you a, you know, it gives you like at 0.070, and you can, some platforms you can set up an actual, you know, a percentage chart if you like. I'm looking for, you know, for example, thank you for pointing out, I hadn't switched back to the other screen here, so let's go look at this again. Okay, now I think everyone, you can see this. So this is a weekly chart of Apple. Same parameters, you know, week pivots, on relative performance, unbalanced volume. And the question was, am I looking for an absolute value of performance? No, I'm looking for a behavior of the line. I'm looking at, in this case, when Apple comes up and starts to move back above its moving average, right in here, that's what I'm looking for to signal that it's a positive, it has positive relative performance. You can see that in, you know, for example, so we can look at the utility average, the XLU, which has been, you know, for a good part of the time has been outperforming. So for example, right in here, you know, it was acting stronger than it came out of this range and outperformed the S&P. Even though it did correct in the last quarter, it still did not correct as much. So it had a nice run to the upside here, and you'll see this more clearly if we look at a daily chart, you know, that we had, you know, a very nice move to the upside. So you're looking at the relative. Let's look at maybe XLI, which is the industrials. It's been one of the stronger sectors. You see that the daily chart had a really nice run. So this is sort of the formation I'm looking for on a daily chart. If we can help this out by maybe trying a couple lines on here, probably make it a little clearer. So when the RS moved above that line there and then started a new uptrend, that was a good sign. So then you look at this sort of correction as not necessarily a major top, just a pullback within the trend. You can see it came right down into the pivot level here, you know, and the S1 support. Yeah, it is important. Some of the best buy signals, the question is whether there's the relationship of the unbalanced volume to its moving average, very important. Yeah, you can see some of the best buy signals are when the unbalanced volume moves above its moving average, drops down to it, even just like dropped down below it for a day or two and then spurred to the upside, as you can see right in here. That's a bullish signal. So I do play a lot of, and when it happens on a weekly basis, then it's even more important. And you can see, you know, both positive and negative signals for the XLI vis-a-vis the on-balance volume. So when I talk in publications, then you know, you can see that for example, the weekly Stark band roughly, or the approximation, is 81.48 right now for the XLI. But if you look at the QQQ, you'll see that it's tighter to that weekly moving average. Its relative performance and on-balance volume as very positive. I often get questions about why, you know, why I don't hold on positions longer term. I think that was the case until 2018, that I stuck with positions for a considerably longer period of time. But given the uptick in volatility that started in 2018, in my view, it's hard to be a position holder. If you look at a stock like Take-Two Interactive, and we can go to a monthly chart and look way back long term, you've had some very sharp pullbacks. Most people, this pullback, for example, was about 25%. So most people will not hang on to a stock through a 25% decline. And, you know, here we had another one. We've traded this off and on fairly successfully. But, you know, here you're dropping from 129, you know, to 92. So that's a $40 drop on 120. So that's a 30% drop in 3 weeks. You know, it will, you know, you'd have to be on a desert island for most people to watch the stock price drop that much. So I think, unfortunately, the environment, you know, for most of the bull market, we've been in a very strongly trending market. You could buy and hold. I don't see the case, you know, anymore. So I'm taking a more shorter term outlook. Okay, a couple other questions. SPX is near all-time high, but the RS is only around 66. What does that mean? Well, it doesn't really mean much of anything, because the RS, you know, you can't compare the SPX to the SPX because you're not going to get any sort of value. You know, it doesn't, you know, you're looking you know, just because a stock has a negative RS, if it has a declining RS, that just means it's weaker than the S&P. It doesn't mean it's not rising. So in a very strong market, you'll find stocks that are still moving up fairly nicely, but the RS does not indicate that. TradeStation, yes, they provide all these indicators. Advanced decline line, of course, is a key indicator. Wasn't really the purpose of today's talk. I think I have, you know, this is the platform I use for my course on advanced decline analysis. So I think I can pull one up here quickly, and then we'll move on to both. Here we go. So this chart, we're going to crunch it down a little bit. I'm sure we can all, so it seems on the page. All right, this is the NYSE composite. Here we have the stocks only advanced decline line in green and the all AD line. So when the AD line measures the health or strength of the market, you know, and that's why it's important. When it's in a very strong trend like it was in here, that's a time that you really want to be long stocks. And this was a little correction, didn't last very long. It's still very positive. So, you know, we measure the daily trend, the weekly trend, and the monthly trend. The monthly trend, I don't know how well it'll show up here, but let's see if we can see it. Monthly trend is basically, well, let's change those of you who are interested. So if you want to change the range, you know, you can go back, say 9 years, and we'll take a quick look at that. You know, it doesn't take you back to the start of the bull market, but essentially, the monthly never really dropped very below its moving average until 2015 and early 2016. And right in here, March 1, it was back to positive. I don't know what you were doing there, but I was quite bullish at that point, and that was a great run to the upside. So it tells you, whether you should be a buyer, seller, or neutral, and it's very important. So let's. Any other questions on the setup? I'm getting sort of more, quick question I'll answer on the S&P 500 scan. I just sent out the latest one. I mentioned this before, but you should remember this is just those stocks that show up with positive on the buy list or negative on the sell list momentum. They are not, specific recommendations to buy or sell any of those stocks. What they are is a refined watch list. So when I make recommendations in the Viper Hot Stocks, I look at those stocks, and if I want to be a buyer, I look closely at the ones in the buy list. Sometimes a stock will have positive momentum, but that just means it's rallying within a downtrend. No stock goes up or down, in a straight line. And so you have to look at those signals, that to determine whether, it's something you want to look at and look at the risk reward. Okay, now you see this. This is what you see. Get started for free. That's going to download their TC2000 software. And if you do that, you can, I think it's a little complex. They want you to sell you the data, but you can still get the data free, but you're going to have to see some pricing first, they have a powerful platform. I know the Warden brothers, they developed this. They've been in the business forever, both very reputable. So I have no problems or no qualms downloading their software. If you want the old version, which is what we discussed, you click on this, looking for the old version of stock charts. And it says, to remind you what I did last time, the legacy version, they now call it. Of course, this has just happened in the last 2 days. You need Internet Explorer, and you have the Silverlight plugin. So then if you hit that, and here you go. You'll get that setup we set up last time. I think somebody asked me about Square last time. Well, Square just dropped below its 20-period moving average. It's coming into earnings. You can see the RS. So now it's acting weaker than the S&P 500. The on-balance volume is still above its moving average and still positive. With this platform, anytime you click on a bar, you'll see what the prices were. So, for example, for the last bar trading here, it opened at 75.23, hit a high of 76.33, a low of 69.79, and last at 70.74. It'll also tell you where the 20-week moving average is, which is now at 72.76, and tell you what, you can see over that the relative strength is, I can't point to both of them at once, unfortunately, but you can see that, under that relative strength, Visa SPY is 0.24, and the moving average, so it's now below its moving average, which is 0.26. So it tells you, what the status is, and then of course, if you want to look at, we change to a daily chart, we'll see that, the RS here, basically topped out. Let's see, figure out the draw here. So essentially, you can see that the stock price has broken support, but you can see that the RS has been in a clear decline, for the last month or so. That's a negative sign. So that was just forecasting this drop recently. On-balance volume is also below its moving average and therefore negative. And, that's also a bearish sign. You can expand. You can look at more data by moving this bar across the bottom. You can see both gave a very good signal here on the way up, but both started to top out here. And, as we were, a month or so ago. And, that was not a good sign. You can also do alerts. You can, manipulate this chart however you would like. and save it, email it, save yourself a link. I think that's pretty much all I have. Nobody else. You can, within there, you can save the layout. You can log on to TD Ameritrade if you have an account with them. All sorts of things you can do to improve your experience with this. Here's the draw. I knew it was there somewhere. So let's go back to the daily chart, trend line. So essentially, this is the kind of trend line break I'm kind of looking for in the RS to signal a positive trend. So right now, there's no reason, no signs of weakness on either the daily or the weekly. No real way to tell how far a price is going to do. You have to look at resistance levels. So like, for example, for this stock, because it had such a large, drop, you would kind of look at the retracement levels. So let's kind of move this back in. So how far is it, a Fibonacci retracement? So you look at the drop from right here down to here. And you'll see that it's not even up to the 38% level. And the 50% is around 80%, $80. So it's got some room to do that. If you had Stark bands, of course, if it gets up near the upper Stark band, then there's potentially a problem there. I hope this answered all your questions and setting them up. I'm planning to do more of these. I'll take one more stock. Somebody wants CROX, so we'll do it briefly. And let's look at the weekly. Had a nice bounce after a pullback. The RS is negative. The on-balance volume is just turning positive, so that's an encouraging sign. The weekly, didn't have a very strong close here. Usually that's sort of a bearish short-term formation. Whereas if you look at this, we opened at 27.31, hit a high at 27.88, and then closed near the lows at 27.40. So I'd be looking back towards the 20-period moving average, and it could drop easily back to that 26.43. So next time I'll be sending out a new survey. If you tuned in today, please fill it out. Let me know your thoughts. I don't know whether it'll be next weekend or in 2 weeks. And I do want to keep these short. So give me your feedback. I'd appreciate it. We'll talk more about the analysis part. I don't really envision this as a forum where I'll be looking at individual stocks for your portfolio because it's more important to try to teach you on how to use these tools, and therefore, hopefully we'll become a better trader and investor. Yes, I do plan to make. I believe I made a copy of this. I'm pretty sure I set it up that way, but if not, there won't. But if there is, I will definitely send you a link, and I'll record it the next one. So I hope you all have a great rest of your long weekend and a wonderful Easter and Passover, and we'll talk to you soon. My plan is to do at least one of these free trading lessons every couple of weeks. And if you want to be sure you know when the next one's going to be broadcast, you should go to viperreport.com and sign up to the viperreport.com email list. From the home page, you can click on this link, 5 Ways to Improve Your Trading. It'll also send you an ebook or allow you to download an ebook with some of my trading lessons. And also you'll be on the list, so I announce the courses in advance and also send updates when recordings of the sessions are available. Also, I send out emails when I publish something on Forbes.com where I'm a contributor. This was last Sunday's article, The Week Ahead in Indecisive Market. Lots of charts, and also you'll get an idea of how I use some of the indicators and discuss them every week. Also, if you're interested in how the indicators are used to time both ETFs and stocks, you might want to try one of my premium services, the Viper Etf Report. You get 2 reports a week, usually 5 to 6 pages in length, detailed market commentary, specific recommendations and stops, and also they're designed to teach you about using my technical tools. Viper Hot Stocks also is published twice a week and includes my weekly stock scans where I look at the best stocks to buy or sell depending on the market direction. Each is only $34.95 per month. You sign up through PayPal. Should you want to cancel, you can cancel online at any time. For those who want more detailed one-on-one instructions, I also do mentoring, and I have a intensive advanced decline line course. So thank you for tuning in, and look forward to seeing you in a couple of weeks for the next lesson.